What is credit score and why should we even care about a arbitrary number? On how can we even check our credit score?
Different products that they're partnered up with, for example, major banks. So there's primarily 5 key factors that make up your credit score.
A negative impact.
You're right. A negative impact on your credit score.
How about you discuss a little bit about soft and hard inquiries?
For sure. Is it in good standing? Have they met their payment requirements every single month? But you go and download Credit Karma and you find out your score isn't the best.
Yeah.
So what do you want to do to improve it?
The important thing is you start working today to proactively improve it.
Harman, do you have any other tips on improving your credit score?
Length of credit history, it's a little bit...
Hello everyone, this is Kanwar and Harman from Financially Turbulent. We're here with a brand new episode today on credit scores, which is the biggest tool for financial leverage. It's going to pass it along to Harman, who's going to give us the agenda for today.
Well, credit scores is not really something which everyone's excited about. A lot of people don't really know what it is. So it's a very important topic that we're going to be covering today. So today we'll discuss what is credit score and why is this so important for your financial journey going ahead in Canada, and how credit scores are calculated and how you can pretty much go about checking your credit score as well as improving it over the next couple of days, months, and years, and even your entire life. Because credit scores go up and down all the time. It's a constant balance of maintaining the credit scores. So let's jump into it. So Kanwar, why don't you go ahead and tell us what is credit score and why should we even care about a arbitrary number?
For sure, most definitely. You mentioned almost half of it already. It is something that's not talked about very often, but it is the most important tool financially that's available within Canada and the United States that helps you make a lot of financial decisions and major purchases, which can include buying a car, taking out a personal loan, student loan, and even getting a mortgage for your dream home.
Exactly. And anything relating to financing of any kind, whether you're, like Kanwar said, you're buying a car, you're buying a house, anything where you're going to be borrowing money, credit plays a major role in your ability to be able to borrow that money from either a lender or even someone that's you just know, right? Or even renting a property these days, you need to go through a credit check to make sure that you're able to afford that property. Even though technically credit score doesn't really give you that information, it does let a potential lender know that you are someone that is reliable in making on-time payments. And that's a really big factor these days. So when it comes to the importance of credit scores in general, the higher your credit score is, the more likelihood is that a lender will lend you some money or a landlord will rent you a property. And the benefit of having a higher score actually is that you'll be able to save money in the long run, because the higher your credit score is, the lower interest rates you get, the better financing terms you're able to negotiate. And that ultimately means you pay less money going forward. So we'll move on right into on how can we even check our credit scores.
For sure, you're right, Harman. I mean, checking your credit score is the one thing we should be doing apart from checking our pay coming in on every day of the week, right? It's just super important. So certain tools you should be using are, well, there's free tools like Credit Karma and Borrowwell, which kind of give you a simpler picture on, what it is you're borrowing from different lenders, for example, and what your credit utilization is. I know we're throwing all these terms at you guys right now, and you might be like, what are all these terms? We'll get to them. We're eventually going to cover them. But if you are looking for a bigger picture and a more detailed report, just to make sure if there's any errors or if you have the right loans on your name, the best tool will be to use credit union such as TransUnion and Equifax.
Yes.
I know you work a lot with a lot of clients that are looking to buy homes. So give us a little more insight on what those two organizations.
So like Kanwar mentioned, that there's a lot of free tools available now, like Credit Karma and Borrowwell, and even your banking app these days where you can check your credit reports and your credit scores. But what I would personally recommend is that people make their accounts at TransUnion and at Equifax, because a lot of these other services use their information to calculate your credit scores. So it's better to have your information correct right at the source rather than relying on your banking apps and things like Borrowwell and Credit Karma, which realistically are only there to kind of sell you additional credit cards, right? That's one of the reasons their service is offered for free, because they're collecting your information based on your credit scores and your credit profile, providing you
different products that they're partnered up with. For example, major banks. A lot of the time when you go on Credit Karma, it'll say your approval rating for a TD credit card, for example, was excellent. And then when you click on that link and actually apply for that credit card, they're getting $20, $30, $40 on just one particular applicant. And when they have, thousands of people applying, that's kind of how they're making money, and they're able to offer that free service.
Exactly. So we'll kind of transition now into talking about how credit scores are calculated and what are some of the key factors that can either increase it or decrease it. So why don't you tell us a little bit about that, Kanwar?
Yeah, so there's primarily 5 key factors that make up your credit score. It can increase or decrease your credit score. The biggest one being your payment history.
Yes.
Kind of just speaks for itself, is how good are you at making your credit payments. Now, this isn't just the amount of the payment. It's not making 100% of the payment. It's even if you're making a minimum payment, it still shows as, you went ahead in that month and made that payment. So it does improve your credit. I know it kind of leads to the next point of credit utilization, which is how much credit are you using. For example, someone has a $10,000 credit limit overall, which includes 5 credit cards of $2,000. Credit utilization should not be exceeding a 30% threshold, which is about $3,000 along the board for those 5 credit cards. Because the moment you go over that 30% threshold, that's going to start impacting your credit score.
Yeah.
And that has a 30% weightage on your credit score overall. A lot of the times, they say too many credit cards is bad, but at the end of the day, having a significant amount of credit cards is helpful, because maxing out one credit card of $1,000 at 90% will have a bigger impact on your credit score.
A negative impact.
You're right. A negative impact on your credit score than spending $1,000
across 5 credit cards,
right?
Exactly. Because that ultimately means your overall credit utilization per card is around $200, right? Which is below that 30% mark.
You're right. Significantly lower.
Exactly. So it's very, very important to keep in mind that with credit utilization, a lot of people only have one credit card. Now, one of the actual ways to improve your credit and make sure that you're not actually decreasing your credit score over time, and this is a strategy I've used with a couple of my clients as well, especially students that have come into Canada and have transitioned over into work permits, is to make sure you have at least 2 credit cards. Now, the important thing is that initially when you go to a bank to apply for a credit card, they are going to do a hard inquiry. And Kanwar will actually discuss a little bit about what hard and soft inquiries are in a short bit. But they will do the hard inquiry. But once you have those 2 credit cards, as your income improves, as your livelihood improves, and as you update that information with your respective banks, you're able to ask for what is known as a pre-approved credit limit increase. Now, the magic of the word pre-approved means is that they don't check your credit before they provide you additional credit limit. And that can actually have a major impact, a positive impact on your credit score over the long term. So how about you discuss a little bit about soft and hard inquiries?
For sure, most definitely, Harman. I'm just going to add on to your last point there. That pre-approved, it's a really good thing in the sense when you are trying to build credit, and having more credit cards, obviously something that you can keep a track of, and managing them correctly. Chances are every 3 to 4 months you will get a pre-approved credit limit increase, even if it's $500, $1,000. It adds up over time, and it decreases your credit utilization, impacting your credit score positively. And just going to soft credit checks and hard credit checks. So a soft inquiry is just a simple review from your credit report for informational purposes. They're just looking at your credit score to determine if you're eligible for a pre-approval. Now, an actual hard credit check will be something where you are applying for a mortgage or applying for a personal or car loan. They are pulling your credit to determine if you qualify for that particular purchase, if the bank is okay lending you, a significant amount of cash to finance your purchase.
Yeah. So the thing with the soft inquiries also to keep in mind is when you as an individual are checking your own credit score through the tools that we previously mentioned, like Credit Karma, Borrowell, Equifax, or even TransUnion, it is considered a soft inquiry. So it does not impact your credit score as long as you're the one accessing your own credit, right? As soon as that transitions over to an institution, a different institution or person that's making an inquiry to check your credit score, that's when it may have a negative impact on your score.
For sure.
Yeah. So next we'll kind of discuss a little bit about what credit mixes are and why they're a little bit important. So of course, you working on the investment side and being in the banking space, you know that a bank typically offers different types of products, right? Mm-hmm. So what are some of the different credit items that individuals can utilize?
For sure. So, having a revolving account, which is just a simple credit card month on month, is one of the primary products that I would say 90% of people that are above the age of 18 tend to have.
Yeah.
Certain other products include car loans, for example. They can have a more positive impact on your credit score overall. If it's a totally different product from a credit card. It's not though it is a revolving payment.
Mm-hmm.
And mortgages as well. So banks, if you are, for example, looking to buy an investment property, banks will just look at, hey, does this person already have a mortgage? Is it in good standing? Have they met their payment requirements every single month? If you have, chances are getting that second approval will be much, much easier, and you'll get a lower rate if you do have a positive track record, a good credit score. And just adding on to, so another factor here is the length of credit history.
Yeah.
Do you want to just give us a little more information on that?
So length of credit history, it's a little bit, I would say, confusing to wrap your head around for most individuals. But the way to think about it is this way. If you were to open a credit card today and you were to utilize that over the next 2 months, and then you apply for a car loan, you haven't really built up enough history of you making proper payments on time for a lender to make a decision whether they want to lend some money to you or not, right? Mm-hmm. So typically, the sooner you can have a credit item or like a credit card or a line of credit or even a mortgage associated with your credit profile, and the more you pay that credit over time, the better history you have. And then you're able to utilize that to get additional lending and additional credit from different lenders. Now, with payment history, it's very important to note that as soon as you open a new line of credit or a new credit item, your credit score does get impacted on a negative basis a little bit because your overall payment history goes down. Because the way it's calculated is the number of items you have and how long you've owned all of those items for. So the longer you can have it, the more positive impact it has on your credit report overall. This is something you don't really need to worry about as long as you're making payments on time, because most people get 1 or 2 credit cards, they get 1 car loan, then they have that car for 4 to 5 years, mm-hmm. and that is automatically going to build a positive history on your credit profile.
For sure. All right, and I think we are missing that last factor there, which is recent credit inquiries that make up 10% of your credit score overall. Yeah. Now, when we say recent credit inquiries, it's pretty much going out and applying for credit cards. Now, I know when you first get your credit card, you're like, hey, this is like money I can go and spend. Let me just go get another one.
Yeah.
But when you're going crazy and applying for credit, it's going to impact your credit score negatively. So the basic rule of thumb is if you are looking to apply for a credit limit increase, which is not pre-approved, or if you are looking to apply for a whole new credit card with a different institution, you do give it about 6 to 8 months after you applied for your previous credit card or after you've got your previous pre-approval. So give it some time, build some rapport with that bank, get those payments in, and then go ahead and apply for your credit score. It's going to impact you negatively, but it'll be much, much easier for you to build it back.
Yeah. Thing to keep in mind is almost everything in Canada, even the US, requires a credit check these days. Even if you're applying for a new phone bill or a new phone service, the companies are going to do a credit check, right? And some of the companies even put not only the inquiry on your credit report, but they also put your payment history on your credit report as well. So there's a couple of different, coming back to a little bit of credit mixes. There's around 4 types of different credit mixes. One is revolving, like you mentioned, which is credit cards. Then there's also something known as open, which is typically classified as your phone bill or your utility bills. Then a car payment will be something like an installment, right? And then you also have the mortgages, which is the major one. A lot of you individuals might not be in that position yet to actually have a mortgage in your credit mix, but most of you will have at least the installment, the open, and also the revolving. As long as you have those 3, you have a pretty healthy credit report, as long as you're paying that on time and making sure your bills are paid on a regular basis.
And just to kind of add on there, Harman, I mean, I'm not sure if it's kind of similar with your industry, but for mine, the basic requirement, because I'm handling money and I'm in the investment sector, they do a credit check on me as well to make sure, my credit's in line, and I'm not going to be out here telling my clients to invest into the wrongful assets when I don't even have my credits in check. So that's also a major thing. A lot of financial institutions, like the big banks, if you want to work for them.
It's also true for real estate and the mortgage industry as well. Before you're issued your license by the respective issuing authorities, they do a background check as well as a credit score check, credit report check on your profile. So it is something to keep in mind, definitely.
Right. So moving right along here, Harman, let's just assume you get your first credit card, you haven't checked Credit Karma, and after this episode, for example, you go and download Credit Karma and you find out your score isn't the best.
Yeah.
So what do you want to do to improve it? What steps would you take?
So number one thing, of course, compared to even Credit Karma, try to make your actual reports, get your reports from things like TransUnion and Equifax, because like we mentioned before, they are the primary information collectors, right? If you need to get anything corrected, these are the individuals who you will have to contact anyways. So make sure to get your credit reports from these institutions or these bureaus, and then you're able to check exactly what is on your credit report. Your score may be low, but you first have to identify what is impacting the score. It could be that you had a lot of inquiries lately, right? Maybe you were shopping around for phone plans, you applied to a bunch of different carriers, and they did a hard inquiry on your profile. Okay. Maybe that's the case. In that scenario, you just have to wait it out and your credit score will bounce back again. But let's say if you missed a couple of payments, then that's something a little bit more serious, because in that scenario, your payment history stays on your credit report 2 to 3 years. In my case, when I check my credit report, it shows me my payment history all the way back until 2018. So that's a long time where it can really, really screw up all of your positive built up credit score and have a really major impact, because you can have a really great payment history for 2, 3, 4 years, but it only takes one missed payment to destroy your credit in that scenario. And keep in mind, it does make up around 30% of your overall score. So it's very, very important. Now, if it is low, it doesn't really make that much of a difference. The important thing is you start working today to proactively improve it. Because one thing to note about credit scores is a lot of people kind of don't understand this, is that credit score is there to go up and down. If you're going to utilize credit, your credit score will get impacted, right?
Of course.
But the benefit is it does bounce back up over time. So just because it's low today doesn't mean it can't be high tomorrow.
You're right. It's like the actions you're going to take right after you've taken out credit, for example, though you've gotten that negative hit. What do you do next to build it back up? So come the next 1-2 years, you need another loan. What are you going to do then?
Exactly. And coming back to a little bit of the credit utilization, right? Maybe your credit score is low because you only have one credit card, like Cover mentioned before. In this scenario, your fix could be very, very simple. You apply for another item to add to your overall credit mix. You can simply either call your bank, update your working information, and actually ask them, hey, am I pre-approved for anything? Maybe if you only have a credit card that's $1,000 and you contact your bank and all of a sudden you find out, hey, you're pre-approved for a 5,000 credit limit increase. All of a sudden your credit utilization went from 100% down to just about 20% in one go. And that's going to have a major, major positive impact going forward as well for you. And or you can also apply for different credit cards if you don't have that luxury. That will take a hard inquiry on your profile, but that extra credit limit increase will actually bring you a more net positive impact going forward from that period.
For sure. No, it's a good point, Harman. I think another point you can touch upon here is the secured credit cards that are a new kind of product that are being offered. Let's just assume you don't want to go through that process of applying for a credit, having an impact on your credit score. You can apply for a secured credit card, which is offered by a lot of institutions now, where you put up an X amount of dollars up front, and that's going to be your monthly limit. Obviously, you can't spend above that limit.
Yeah.
And at the end of the month, you are required to make up the entire amount again. So it's like a top-up account. You pretty much top it up at the end of every month. Use the credit card as you would regular. Same thing. Don't go over the 30% threshold. That's going to be the kind of goal you're going to go with. And then you're going to pay it down. And that helps you build credit in the long term as well, and can actually give you an upper hand when you're applying for major loans rather than just another credit card, for example.
Yes. And this is very beneficial for students and those individuals that can't add other things into their credit mix just yet, right? Can you talk a little bit more about what kind of companies actually offer these types of secured credit cards, if you happen to know?
Absolutely. Just before I do name certain financial institutions that offer this product, just to let you guys know, this is not financial advice, and nor are we advertising any of these products. Before you do, go into looking for these products, please do your own research and read the fine print and the terms and conditions before applying for these products. And also kindly consult your credit professional. And if you do have any other questions or would like us to get you connected with someone, please don't hesitate to reach out to us as well. But just to name a few, I would say Coho, which is very popular now, and so you guys probably seen ads on TikTok, YouTube, and even Instagram.
Yeah.
And also another firm would be Neo Financial. They offered secure credit cards, which is pretty much like a debit card. For example, you want to have a $500 credit limit, you would deposit $500 into your secured credit card, and you'd go about your business, spend it throughout the month, and at the end of the month, you'd get a bill pretty much saying, hey, you owe $200 back onto your credit card to make sure that balance is up to $500. And at the end of every single month, they will report, your credit payments and also your utilization to credit bureaus such as TransUnion and Equifax, and that's going to help you increase your credit score. Harman, do you have any other tips on improving your credit score?
Well, just to add on to what you've said, basically, for most individuals that have maybe gone through situations like bankruptcy or they've had their identities stolen, these secured credit cards could be a way for you to build your history back up, especially because if you're in the low credit ranges, you typically won't get approved for any kind of other credit products. So this is something you can look into to kind of help you on your credit journey going forward. But like Cover said, we are not credit professionals. This is information that we have overall gathered based on our experiences through our own credit journey, and also the experiences I have gathered through the clients that I have served throughout my real estate journey. But hope these tips help you guys. And is there any other information regarding the podcast you want to share?
For sure, yeah. This kind of brings us to the end of our topic here on credit scores. I know we've kind of only scratched the surface. You guys probably have more questions you may want to reach out to us or discuss to us about. This is certainly a topic we want to visit again, of course, because this relates heavily with our field as well. So yeah, please don't hesitate to send us any questions to Financially Turbulent either on Instagram or TikTok, and we'd be happy to answer any questions. And also, please don't forget to share this podcast with your friends and family. Once again, we appreciate your support. Thank you guys.
We're available on all platforms.
Oh yeah.
Spotify, Apple Music, Audible, YouTube, practically anywhere that you can listen to a podcast or watch a video, we exist there now. So would highly appreciate your support. Some of you have already been sending us some quite great messages on our Instagram and our other social pages, and we hope to see the support going forward as well. Take care.